Shall we begin then? We have a quorum and Warren?
Yeah, let's get started.
Yeah, go ahead. Thanks.
Okay. Good afternoon and welcome to this virtual meeting of the Audit, Finance and Risk Committee of the Toronto Seniors Housing Corporation, which is being live streamed. In addition to the participating board members and the leadership team, I am pleased to welcome our virtual audience and thank you for joining us. I want to thank Vince and his team for the preparation of the material brought forward for today's meeting. Let me start with the land acknowledgement. As a committee of a City of Toronto corporation, we acknowledge that we are on the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples, and is now home to many diverse First Nations, Inuit, and Métis peoples. We also acknowledge that Toronto is covered by Treaty 13 signed by the Mississaugas of the Credit and the Williams Treaties signed with multiple Mississaugas and Chippewa bands. We have a very brief agenda today. Vince will be updating us with the financial position of the corporation, the 2023 budget process, and some staff changes. Now, may I have a motion for the approval of the public agenda?
So moved, Mr. Chair.
Moved by Warren and seconded by Fareed. Next item is declaration of conflict of interest, if any. Does any member have any conflict?
Nope.
Okay, having heard none, let's move to the next item. That's the approval of the closed, both the public and closed session minutes of AFRC meeting that was held on May 3rd.
So moved, Mr. Chair.
Yeah, moved by Warren, and I will second it because I was in the meeting. Fareed, you were not in. Yeah. Okay, the next item is item number 5. That's the approval of the public and closed session minutes of this committee's meeting on June 27. Warren, would you like to move?
So moved, Mr. Chair.
Yeah, moved by Warren and seconded by me. Next item, what I will do is probably both items 6 and 7. Vince, you can take them together and then we can have this answer questions or any comments on that later because they are interrelated. Vince.
Yes, thank you, Lawrence, for the introduction. And today we're going to be talking a bit about the financial result for the Toronto Seniors Housing Corporation from January to July 31st of 2022. And attached with the report, you should see 2 attachments. First attachment talks about the statement of operations. So through to July 31st, 2022, TCHC incurred operating expenses of $8.5 million. Revenue amounted to $8.578, being composed of $2.355 million from the City of Toronto and $6.188 million from TCHC for the TSHC's rental units. And it also comprised of $35,000 of interest income as well. The total City of Toronto grant amounted to recognize of $2.355 million from a budget of $3.584 million, with a positive variance of year-to-date of $1.229 million. The positive variance is a result of a lower than expected legal and professional services due to the delay in lease agreement, lower payroll benefit costs, along with reductions in software licenses and travel, conferences, and non-payroll related expenses. So for the first 7 months of this year, we are operating at a pretty good situation overall. If I may bring you up to schedule 2 in the attachment. Attachment number 2 consisted of the statement of operations. And before we go to the statement of operations, is there any questions on the statement of the financial positions?
I do have, but I thought we'll do after you, give details of forecast and this thing, or maybe if any other member would like to have any questions. I do have certainly questions on.
No, I agree. Let's Vince just go ahead and then
Okay.
we'll have a little discussion afterwards.
Sure. So the statement of financial positions, if I may add to the attachment number 2, you will see in there a balance total assets of $7.7 million. And the $7.7 million include cash on hand in the bank of $7.423 million as of July 31st. Along with that as well, you'll see 3 other entries, 3 other items: HST recoverable amount of $144,000 and an accounts receivable of $17,000, which pertains to the interest income that we were expecting to get from the bank. And then there's a prepaid expenses of $200,000, which is mainly consisted of all the prepaid items. In terms of the liabilities overall, we have accounts payable consisting of $2.278 million. And out of that, there's also $5.472 million in the deferred grant funding from the City of Toronto. Also, and in terms of the net assets, unrestricted, there's a surplus of about $36,152. So in terms of the actual accounts payable, and I want to maybe just to quickly go into that a little bit more. There's about $760,000 of that includes payroll accruals. And in terms of the pensions and benefit, there's about $636,000 of that accrue in there, mainly due to the delay in getting OMER setting up in the account separately with TCHC. So we've finally been able to get that completed, and the city also has been able to provide the line of credit through that, and then therefore we've been able to complete that. So moving forward, that balance should be much lower. There's also an HST payable there of $439,000, which we were to pay shortly thereafter. And then there's an interim staff and seconded employees that we did an accrual for, consisted of $312,000 overall. So that is the quick snapshot of the first 7 months results of the financial positions and financial operations of Toronto Seniors Housing Corporation.
Yeah, thanks for that. If you can go ahead with the
forecast.
Forecast as well as the cash flow stuff, and then.
Sure. Maybe before I get to the forecast component of it, maybe what I will discuss a bit about it will be on the June 2022 Q2 and TCHC reconciliation. Again, that ties a bit back to the financial statement, of course. I just wanted to provide the information to the committee that TCHC has provided us with an overview of the June 2022 and Q2 reconciliation on a conference call. So they presented for us the first month of operation, and a number of entries appear to be missing or not as accurate as we anticipated to be for the first month. For example, in the net revenue section, which accounts for the total revenue collected, less the expense paid for utilities, mortgages, showed us a much lower expense base overall. On the other hand, charges relating to shared services showed the cost of IT as a double the budgeted amount at this point. And so right now we're still waiting for TCHC to provide us with a full detail of that reconciliation. So definitely by Q3 we should have a better information with respect to more data, because now we will have 3 months of data as opposed to 1, and so hopefully we can get that more information updated. And then quickly in terms of the forecast, if I can maybe point you to attachment 1 in section item number 7, and in that section, essentially TSHC is projected to finish the year with a surplus of $2.489 million, of which $1.491 million is generated from TCHC. The amount is, of course, is subject to reconciliation with TCHC at this point, which has to be repaid per the transition agreement. The balance of the surplus, which amount to $998,000 of that, relates to underspending of the City of Toronto grant and is due primarily to the timing of the recruitment and not moving forward with the lease agreement at this time. Revenue overall, if you look at the attachment number 1, included $29.6 million of that, of which $7.6 million came from the City of Toronto, and another $342,000 was a carry forward from 2021. The remainder, 21.6, came from TCHC's portfolio calculation based on the estimated revenue, budget revenue less operating expenses, related to properties such as utilities, mortgages, property taxes up to July 31st of this year. Total expenses consisted of $27.3 million. That included salaries, benefits, professional services, corporate costs, supplies, and shared services with TCHC. Overall, included in the salaries of $16.3 million is 14.7 of that million is for the SHU operations, and out of that 1.6 is for the full-time corporate staff. This amount included an annual hiring of the 20 approved positions, with 6 expected to be hired in 2022 and the remaining 14 in 2023. This was based on our best estimate to include the hiring of the director positions, which included 3 for 2022 and the remaining 2 director positions in 2023. Services including insurance totaling for the year $5 million, of which $2.4 million of that is for interim and temp staff. 752 makes up the legal charges, legal services, audit, and also third-party consultants as well. And in that amount as well, that includes a $650,000 insurance amount that we've included for the renewal of insurance, expected to be happening in October and November of this year. And then there's some additional estimates on the communications and also HR related expenditure as well. Included in the report as well, there is the cash flow projection. I think before we go to that, do we want to pause here and if we want to ask any sort of questions at this point?
No, exactly. If you can
proceed. Okay.
Predictions as well. Yeah.
Okay. The cash flow projection, we are anticipating that we will flow through between now until the end of November. Starting in December, we expect to be at a negative position, assuming that we will be repaying the $1.5 million back to TCHC and the expected 998 surplus to TSH to the city for the projected underspending from the city. And therefore, by doing that, we will anticipate that we will have a bit of a shortfall in the amount of about $1.8 million at this point. And so we are requesting for the city to provide some additional funds. And also on top of it, we will request city for a letter of guarantee as well through the City of Toronto. So those are the immediate asks that we will be working with the city to get the applications in place in order to get the remaining items protected for us in moving forward in terms of cash flow. I think that brings back us to that discussions about the cash flow. And so our next step will be, we will be submitting this form in application to the city to provide a letter of guarantee and in the amount of $2.5 million with the line of credit with RBC as well. So that will be our next step and next discussion, which will definitely be involve the city, and we will be sending both the forecast on the 2022 forecast and also the cash flow forecast as well. And those are the items that I have for submission at this point for item number 6 and number 7.
Thank you. Any members have any questions on all these 4 documents we have?
Mr. Chair, I'm quite happy with the briefing notes and the presentation that's been given by Vince. One question with respect to the letter of guarantee, which is in the process of being finalized. Is this is simply needed by RBC itself, or are there other uses that you making of it?
If I may add, I think there's 2 components of this. One is to give us an indication where we're going to be landing between now and the end of the year. So that gives us a good indication of where our cash situation will look like in the next 3 to 4 months. But also this would certainly be part of the application as a requirement to submit to the city. And therefore the city, we will use this application, we will use the letter guarantee from the city to apply for a $2.5 million line of credit through RBC. So RBC requires that to have that information. So it's a bit of a 2-prong approach, if you want to call it. First, it would be to provide us with a headwind in terms of where our cash situation is going to be in the next 3 months or 4 months. And then the second piece of it would be also to apply to the city for the line of credit.
Yeah. Okay. Thank you.
Fareed,
Yeah, thanks, Mr. Chair, and through you to Vince. I know there has been a number of areas where we underspend because of obviously startup costs and the inability to get staff and perhaps all the services in place. I'm assuming that none of this would have any material impact on our budget for 2023. I know that that's a separate process, but I just wanted to make sure that we put forward a case as best as we can that the costs that we have not incurred to date are still costs that we would expect to incur in 2023 and beyond. So the refund that we supposedly owe the city is not something that necessarily we're going to be able to generate on an ongoing basis.
Yeah, and if I can may add on that piece of it, certainly there are some component in here that we are anticipate to underspend in the remainder of this year, namely that the original discussion, if you want to call it, is that we were supposed to have the lease agreement in place by January of 2023. Certainly that now has been moved back. We have been in discussions with with TCHC in terms of the timing. They are pushing that right now to 2023. We still are trying to finalize that in terms of a date, but certainly that will push some of the expense back to 2023 as a result of that. But also in terms of the current remaining forecast, we were anticipating about additional headcount, expected to be hired in the current fiscal year. However, just given due to the nature of the process, we've been approved for 20 positions at this point. Right now, only probably a handful of those positions are being recruited. So therefore, those are the two components that makes up that sort of overall positive variance overall. But certainly it is an item that will have to be pushed back into 2023 and certainly will affect the 2023 budget, which we will have further discussions of that as well in our in-camera session.
Thanks, Vince.
okay, I have a few questions on all these statements, Vince. Now let's start with the statement of operations. The second item on the revenue side, revenue from TCHC, is it net of costs?
Correct. It is a net of costs. So what they provide to us is a total revenue that we would have received through all the portfolios and all the costs relating to service them, including utilities. And again, this was an estimate done back early this year. So we've used a very simple calculation, which is a $3.094 million. And that included as a very rough estimate at this point. So this is 2 months into the operation. One of the things that we did talk a bit about was the fact that we need to get some reconciliation in terms of, where we are in terms of those expenses. And we have not received, further updates in terms of that expense for the second quarter. So, but to your point, Lawrence, yes, that's correct. That's a sort of high-level calculation for revenue less expenditure from a budgetary estimate-wise that we've included in that revenue. Once we get more updated information from a reconciliation perspective, we will true up the number between now and end of the year. And depending where that might hit, we might end up owing them more, or they might owing us some money back of that. So it's still a bit of a work in progress at this point. But given the fact that we have not seen a detailed report from them as of the end of June at this point, it's a big concerning piece of it. And right now, it's an ongoing discussions that we've been having with our team to be able to try to ensure that they can get the report to us more timely for the third quarter, which we would anticipate we will probably be receiving something by the end of October, so within about 5 weeks time. So we will be working with them very closely and to ensure that they can give us those information on a timely basis as well.
Thanks for that. Would you be able to give, separate statement as a backup for this number, 6.188 million, how you arrived at that? So basically rent, various kinds of rent, whether it's estimated or however you calculate it. If you can provide that, one would be helpful. That's basically one is revenue, various kinds of revenue, RGI, market. There could be subsidies, parking, laundry, cable fees, and then your various operating costs, utilities, municipal taxes. I think as per our transition agreement as agreed. So that's one thing if you can. And then if at all, if you can provide them in an Excel format, that would be useful.
Yeah.
Possible. Okay. Then going to the second under expenses. I believe the professional services and insurance. I mean, professional services include all those consultants fee, your legal fees, and all that. Would it be possible for you to give us, break down that insurance, not to mix it up with the professional services, show insurance separately?
Yes.
Okay.
Yes.
Because what Norm used to do, just is to services. I believe what he was referring to was computer software and services, right? Probably that's what it is. Okay. And coming to the last item, management fees, TC, is it shared services expenses?
Correct. So this is the shared services that we pay to TCHC, which is comprised of the $779,000 we pay per month. So this would be the fee for the first 2 months.
Yeah. Can we use common terminology across all statements? Till now we are using the shared services expenses, and your budgets and cash flow. I think we used word shared services. Here we use management fees. I think we are not aware of that. Probably it helps understand and compare the numbers across all statements, wherever possible, to the extent possible. If you can do that, that will help.
Yes, definitely we'll make that change. Thank you.
What else? And another thing, maybe one is explained to you. Our starting point was up to 31st May, what Norm provided us with the information, right? Both statement of operations and balance sheet or statement of position. Is it possible for you to give me, as of 31st May, whatever that, January to 31st May, we had numbers. I mean, whatever submitted to this committee as well as the board. And then next, you can have 2 columns, June and July, so that how you arrived at these numbers.
Yeah.
Again, in Excel format, that would be good.
Yeah. Okay.
Another one is, this budget which you have provided, rather under forecast, I think it's, if you can take that, forecast, statement of operations. The first column talks about actual. What exactly is this? This actual, is it actually spent or is it on a cash basis?
So so basically what this column refers to the fact that the first 5 months of the operation, when Norm provided us with the expenditure, so that's that component, along with the June, are all of the what we consider to be actual. In July, there are some component of the actual, and then we basically have August and September included in there as a forecast overall. So so that's sort of the rollout of the actual versus some component of the actual piece of it, and then you've got about 5-6 months of forecast included in there as well.
It's a bit confusing because I was comparing with what Norm provided as of 31st May actual. Those numbers are slightly differing here because the first component, I mean, the City of Toronto grant, I think it shows 2.831. I think it's whatever we have received, it's on a cash basis. Whereas Norm's on accrual basis, it's a 2.071 million. So when your column title, it says actual and it's confusing. Again, what's happening here. Some other items don't match from the actual. So benefit says 30,754. Norms items are small variance, but note again, it services 1.575 million. This first column talks about 1.881 million. So that's a bit confusing. I think it's a mixed up. Though you call it actual, probably there's some accrual. The cash basis items are also there probably. If you can sort that out, it's a bit confusing to me. And another one, you got a budget from June to December. It maybe at this maybe it's not finalized, not firmed up. But if you can break that into, you might have done it for your own calculations, monthly breakdown, June, July, December. Each one, have you done it?
Yes, we do have an actual.
Yeah. That budget also, if you can provide in an Excel format, so that it will be easy for me or other members, to just verify those numbers, and then it get some comfort. Yeah. So basically, I'm looking for 3 items, which I said was the first item was budget. Okay, the budget broken down by months, and then your TCHC revenue minus those operating costs. Second one, and starting point, like the statement of operation, starting point is January to May, what Norm used the numbers, and then I would prefer to have June and July. Then when you total it up, it becomes your YTD.
Yeah. So we'll update that piece of it, and then we'll get you more.
An Excel format, please. I mean, you can email to our other audit committee members as well. So
okay.
And then I have some suggestions for going forward. These income statement. It will help if you break it into 2 blocks. One is for the month or for the period, right? So for the period, actual, your budget and a variance. Another one block is your YTD, year to date, budget, actual, and variance column. If you can have it, it's a bit easier. The board members depend on, at least rely on this committee to give them some kind of comfort that we are happy with these numbers, comfortable with these numbers. Okay.
No, that's definitely
that's going forward. You can do that. I'm not expecting it for this one, that format. But other those 3 things you can provide it before the board meeting. That would be helpful.
Okay, that's great. I certainly will take that feedback back. We did consult with Norm before the meeting, and so we will certainly reach out and continue and provide you with more information. So what I would suggest maybe is that even on the format, we will send you the revised format for you to review to make sure you feel comfortable with it, and then for the next meeting, we will ensure that that's been corrected in the format that you want to see.
And before the meeting, if you want to talk to me, informally, or feel free to contact me. I'll be happy to give you feedback on that.
Okay, perfect. Okay.
Thank you. So any other questions, committee members? Do you have? No, Warren, Fareed, do you have any questions?
No, I'm fine, but thank you, Mr. Chair, for raising those points. It's, I think at this very early stage in the development of the corporation, it's very important that we put an emphasis on format, and in the case of this committee, format of presentation, so that we can get consistency from period to period.
Okay, thank you. So in that case, I think it's time for us to move to a closed session. So I need a motion for that.
So moved.
Moved by Warren, and a seconder. Okay, seconded by Fareed. Let's move into closed session.
Live stream is concluded.